Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to the Thursday edition of Benzinga's PreMarket Prep. I'm Seth Blazowski filling in for Spencer Israel, here with Joel Elconin and Dennis Dick. On today's show, we are talking trade talks in October, overnight breakouts in the market, the few earnings reports that have been coming in, work getting worked, and check on some hurricane stocks. Today's guest later in the show is going to be Marc Chaikin of Chaikin Analytics. And let's kick off the show today, guys.
Thank you very much. S&P's up 24 and a quarter handles, 29.6275, made that low right off the 6 p.m. open at 29.3650. Your high, 29.7175. It's going to be hard picking out some resistance here because there isn't any here after that breakout. Crude in the green here by 3 cents at 56.29, sneaking up on the upper end of that trading range around $57. Gold in the red by 7.60 at 15.5290. Silver finally giving a little back here, down 15.7 cents at 19.39. Bitcoin in the red by $145 at 10,690. Triple D will bring you in. Do you hear me loud and clear?
I hear you. I'm not sure if the YouTube video is working or not on the YouTube listeners. It's definitely not working on the page. There's no video on the page.
Okay.
So, Seth, if you could enable the page.
Yep, there's issue going live. We're good now.
We should.
Okay. I think he's fixed it now. So, okay, refresh your page. If you didn't refresh your page, obviously we'll be able to hear that. We think we are working. We think we're working on YouTube too. So away we go. The show must go on.
Dennis, before you start,
yeah.
Do you think that Trump listens to PreMarket Prep? You know,
everybody listens to PreMarket.
I was talking about the breakout, right? And we closed right near the breakout area, and he says, "You know what? We need to break. We need to clear 29.40. How about let's hold trade talks in October?" And then boom. Here we go. We're off to the races.
He caused the breakout here.
For sure.
Anyways, you look at it here. We've been in this trading range that we've been talking about for a month. Every time we get up to the 20, what do you call that range? Maybe 20?
293, 294.
Yeah. Every time we get in that range, top of the range, we sell off. We've been up there 4, 5, 6 times. We are finally breaking out of the range. So what does that mean? Does that mean we go straight to 300? Or does that mean I'm looking at SPY, or does that mean we come back in? It gives you a chance here yet. I'm not chasing in this market because I don't know what the next headline's going to be, but it does look like it wants to resolve itself to the upside here. Finally, we're getting a little bit of resolution, at least out of the range.
Well, trade talks in October, that's what the market wanted to hear. Technically speaking, do you wait for it to come back to that area? I mean, as good as resistance as it was, will it be, I'm sure it'll be.
Are you going to get a shot?
Yeah. Are you going to get a shot down there? It's 23 handles away. Shorts, man, oh man, they're tough, right? They're in a tough position. And I think a lot of these managers just came back from September. They sat out the chaos in August and they're like, oh boy, I hope I get a pullback here to deploy some money, and they didn't get it. So it's tough. We're looking on the upside. I guess it's just, temper things a little bit. We are 10 points off the pre-market high at 29.71.75. So we'll use that as a target. Man, if you're trying to buy a pullback, which I was trying to do yesterday, but it never gave you that 50% retracement that I'd kind of like to lean on. But mid-range on the session comes in, let's see, at 29.55. So that's 7 handles away. You may get a look at that. But 8:05, we got Marc Chaikin coming on at 8:15. So let's go through some earnings reports. We still have some earnings reports last night. And I guess let's start with the bad one here. Let's start with Slack. work.
That would be you, or it would be or who's reading the earnings report? Because I don't have my news open.
We got Seth reading the earnings reports here.
Okay, Seth, come on in and go to your Benzinga, trusty Benzinga Pro. Grab that Slack earnings report here. We'll see what the numbers say.
Yep, let me pull it up.
WORK is where we're looking. Trading down 13% here in pre-market.
Yep, so it looks like the estimated revenue was 140 million, 140.720 million, and they came in at 144.973. So
Slight beat.
So they slight beat on earnings or on revenue. On their earnings per share estimate was negative 0.18, and they came at negative 0.14.
This thing popped initially on the report. If you look at the after hours action, if you can show that chart, Seth, from last night, it popped about $1.50 on the initial report. And then it just turned around and it tanked and it tanked and it tanked all the way down the 26 handle. Obviously, yeah, over $33 last night. So it was up over $2. But they pulled the rug out from under this thing, and now it's making new all-time lows.
Yeah.
I don't get the valuation. I don't, we use it. We use the product. It's a good product. I just think at this valuation, it just doesn't make any sense at all. It's not something that can't be duplicated, in my opinion. I've mentioned that before. It's why I haven't owned the stock and why I probably won't own the stock for a while, at least until the valuation makes some type of sense. Right now, they're just burning cash and obviously looking to expand, but difficult to really find the bull thesis here.
It is, and boy, this was one IPO I was thinking of buying. I'm glad I didn't. That pop into the 33 handle, that came just short of your August high of 33.33, but I guess we really don't need to talk about that anymore. I don't think we're going to rally $6. But if I've seen this formation once, I've seen it 1,000 times. You got your pre-market low at 25.82. Right? And you bounced $1.40 off that level. So I think maybe it's shorts, or I don't know if people are waiting for the washout long or something, but there's buyers in there. I don't know if you're going to come back down and see that 25.82 today. So I've been looking to maybe try, if you're looking to cover a short a little bit ahead of that level. I will say I'm not expecting a major rally. The high of the bounce has been 27.50. So there's your chop and slap from 25.82 to 27.50. That's my prediction for the early range in Slack.
I say when stocks are making new all-time lows, you got to go. I never want to own a stock making a new all-time low. It's why I won't own work. It's why I won't own MNK here either, which is a nice little segue into your disaster stock of the day. It looks like bankruptcy is a distinct possibility for this. They've hired a restructuring company, stock trading down 45% on that news. No official announcement of bankruptcy, but obviously the market is speculating that that is a possibility here. Stock is down at $1.40 now. What a disaster story. They were saying it was the opioid thing. $125. You got to forgive my nasally voice here too. I have a cold. It's September, I guess. You get a little bit of weather and the kids get sick, and then I get sick, and that's how it works. But $130 back in 2015. We're $1 here now. I don't think the stock is coming back.
Yeah, it's just settling in here down $1.40, $1.16 to $1.43. You were a little bit lower. Let's see. The low is actually $1.38. So it's just hanging in there. Nothing good to say about this stock, but let's go. We got some. You talk about good days to report earnings.
Well, just wait. I'm not done with the MNK story. So you got Teva that is trading down on this.
Sure.
It's down 30 cents. You have ENDP also trading down on this. Obviously, the opioid thing happening. Both those stocks have been in the gutter as well. All these stocks are no touches for me. I mean, ENDP was $90. It's $2. People speculating it's going to do the same thing as MNK. Teva, the same story. The Warren Buffett poor investment. $70. It's $6 here now. It looks like it could potentially do the same thing too. At least that's what the chart says. All these stories are just awful stories.
Boy, yeah, the Teva I see that's trading down 28 cents. And I guess the big boy here in all this is Johnson & Johnson. And that's just kind of hanging out. I mean, it's trading up, the beta with the market up 64 cents. I think this is right around the area. I know it had a big range on that verdict day, but boy, oh boy, it's very close to the lows in the move here at 126.63, hanging in there. But the biggest of the pharmaceuticals involved with this, Johnson & Johnson, you could say it's on support for now, $3 above it. Just a quiet consolidation here. Really don't, needs to get over what is a triple top here, 132 to get out of the woods.
All right, you wanted to go to a good story. What's the good story you got for me here besides this overall market that just is ripping?
Let's go with Cloudera, CLDR. How did they do?
Is that a good story? I don't think it's a good story. It's up 13%, but it's been a disaster story for a long time. It's a stock that's in a clear downtrend. It's a stock that has been ugly. I mean, it's $22 a year and a half ago. It's $8 here now. I think it's another selling opportunity. So anyways, what's the earnings here? It's good. Yeah. It's a good story for today.
So earnings came out yesterday after market. We have earnings per share estimate at minus 10 cents, and they came in at minus 2 cents. So they beat by.
They didn't lose as much as they were supposed to.
Yep.
Yay.
Revenue estimate was 183 million, and they came in at 196.
Stock has been an absolute dog. You think about where the cloud stocks are. You think about where other tech stocks are. A lot of stocks rip it, making new highs. This has been the dog of the group. It's up here this morning. Maybe it's cheap on a valuation level, but when they're losing money, I can't even, when if you're losing money, you're losing money. So forget about PEs on it. I can't, maybe it comes back. Maybe it fills the gap. If the dogs are barking right now, we even saw GE yesterday get some life. So you are seeing a lot of stocks that have been underperforming rally. Another stock we could talk about this morning, just on a segue, is GII, which is G3 Apparel. It did not have a good report at all, but doesn't matter because dogs are barking here right now, and they're squeezing the shorts a little bit too. That's trading up 5% on a very bad report, in my opinion. So, I mean, you're seeing, these stocks that are really in the gutter actually start to turn it around a bit here right now. But these pops usually on these stocks are usually temporary, and usually the overall trend wins. So I would say on a stock like Cloudera, you get up with 859. If you're lucky enough to be long from the last couple of months, most shareholders are probably long from a lot higher, and that's why I'm a seller of Cloudera.
And Mr. Icon did take a stake in Cloudera. Dennis had the technical analysis perfect on this one. You had a gap down, a huge gap down day. That was probably on earnings as well. In order to fill that gap, you need to get to 852. Now your pre-market high is right in that area at 840. So if you want to, not pinch pennies here at 810, big gap to fill.
I'm a penny pincher.
Yeah. Okay.
It's one of my flaws. And obviously, we all could be better traders. I need to stop penny pinching because a lot of times I miss a trade trying to save a penny or two, and it's a mistake. In this market with this kind of volatility, don't try to save a couple cents. Lift the offer or hit the bid, because this market has so much volatility. You miss a trade for 2 or 3 cents, and then you watch it go $2 or $3. If you like the trade, get in it. Don't try to save yourself a penny or two. We're not scalpers in a high-frequency trading world. It's something I need to relearn and educate myself that you can't be looking to pinch pennies in this market.
Now, here's an interesting report here. And someone asked me about it yesterday, and I'm like, wow, this stock is in Nowheresville. Palo Alto Networks.
Oh, my goodness.
$14.51.
Yeah.
That must be a good report. What do you got for me?
No, you honestly, the after-hours action in this is absolutely incredible. So give us the numbers here, Seth. But holy cow, we got to talk about this after-hours action. What a reversal.
Yep. So we're looking at an estimated revenue of 182 million, just over 182, and their actual revenue came in at 185.8 million. And then we're looking at an estimated earnings per share of 1.420, and they came in at 1.470.
So
it absolutely got crushed. And I was looking, and I traded the peers on this thing. Good luck. So obviously I should have hedged with the leader. So Palo Alto's trading down $20 last night, $20. So I'm getting short CyberArk. I'm trying to get short Symantec. I'm trying to get short FTNT, Fortinet, all the peer plays, because it's down 20. It's going to bring them all down, right? Then on the conference call, they just decide to rally the hell out of the stock, and they rally at 35 points from the low. So now I'm like, okay, all my sympathy trades are absolutely no good. I'm scrambling to try to get out of those, just to even scratch them. I was able to buy a couple, and I was able to actually somehow scratch most of them. I actually got long CyberArk. I reversed and got long. So short, reversed and got long. But I mean, it's tricky to be playing sympathy when you have a complete earnings reversal and to the tune of like a $200 stock rallying 35 points in a matter of 20 minutes off the lows. Incredible movement.
I got down to 179.15.
Holy cow.
Yeah.
It looked like it was going to be a disaster, like one of your disasters of the day. And then I don't know what was said on the conference call. I don't know if you have it there, Seth, but something was said on that conference call. At least that's what they were attributing it to, because the conference call was going on and it started buying and they started buying.
It could be that they announced the intent to acquire Zingbox. Which
that usually is bad. So
yesterday.
Usually when you're acquiring something, I'd imagine they said something about guidance or they said something. I wasn't listening to the conference call. I just saw the action ripping and I was like, okay, time to cover all my pure shorts. Lucky I was pretty quick because I started covering them when Palo Alto was still down, and obviously PANW up 15 points at one point. Incredible movement. Can we bring in Marc Chaikin on the fly here just to talk about this stuff too?
Yeah. Do we have Marc in the background here?
Let's bring him in. Marc's here
right now.
Marc Chaikin?
Welcome to fall, guys. Here we are.
Yeah, you sound. What you been hanging out with Dennis? You sound a little bit stuffy too.
I got a cold, Marc.
No, this is allergy season in Philadelphia.
It's allergy season.
Thanks for asking.
And cold season when you got a 2-year-old and a 4-year-old at home, both of them.
Oh my God! Well, I have a 3-year-old.
Basically hopeless. They're coughing in your face, so you're basically done. So both me and my wife have a cold now too. So, anyways, Marc, this market is just, it goes up 300 or down 300 every day. You just don't know which way it's going to go. I mean, all headline driven. What do you make of it?
Ignore the headlines. I had a big discussion with a friend of mine, Bob Lang, who writes for The Street. Very smart guy.
Know Bob. We've had him on the show. Yeah. He's great.
He said everybody in his chat room is nervous. They're on the sidelines. He's whipped around. And I said, Bob, you got to buy the dips. $40 billion has come out of equity ETFs and mutual funds in the last month.
Oh, they're becoming
and we're at 52-week record levels. 2% of all equity assets have been liquidated over the last 52 weeks. The most recent two times were 2001 or 2002 at the low and 2016 in February. People are bearish. They're leaning the wrong way. So what I think you got to do is listen to Paul Tudor Jones. This goes back 35 years in an interview he did that he has banned, so you can't find it. He said, if you want to make money on Wall Street, discover who's leaning the wrong way and go in the opposite direction. So who's leaning the wrong way here? The public is scared and they're out of the market. And this market's going to go to new highs, in my opinion.
It looks like we've taken out the top of the trading range here. So technicians would say, yeah, you have room up to the new highs. And I think you're correct here, Marc. I think I'm a buyer of pullbacks as well. I mean, we've had lots of chances to buy pullbacks in the last month. There's been lots of them. 1, 2, 3, 4, probably 4 pullbacks of 700 or 800 Dow points if you want to talk in Dow terms. And I bought a couple stocks. Now, obviously, wish I would have bought more, but I'm pretty, fully invested as I always am. But I mean, this market just incredible resilience, really. And there's a lot of things for the market to worry about. I mean, how many times in the media pump this inverted yield curve and saying it's an imminent recession? I mean, I saw it almost every day for a while on CNBC. I was waiting for the little ticker to pop up in the corner on the inverted yield curve. And obviously the China trade talks, problems overseas. There's been lots of things to worry about. The market just keeps rallying, or at least held up in the face of those worries.
Well, there's always something to worry about. I go back to an appearance I did on the Closing Bell in 2012, and they always pair you with an analyst with a different view. And this guy was saying, this is the Greek debt crisis. This guy was saying, if you're long equities, you're insane. And we know what happened in the ensuing 7 years. But there is a pattern of human nature that people have to overcome here. When I started in the business, people still used GTC orders. And we used to joke, because we were dealing with the public back then, that it really meant good till close. Because when the stock price got close to the order, they would.
That's still true.
Yeah, so that's what people have to overcome. So, but in addition to buying the dips, there's a pattern that we have at Chaikin called bullish personality changes. It's almost like a cup and handle coming out of that saucer bottom. There's a lot of really quality stocks that are exhibiting that pattern. My poster child right now is Bristol Myers. Bristol Myers is going to earn 428 up from 398. Stock's trading at 48, pays a 3.4% yield. They're going to have Celgene with a really nice pipeline of stem cell stuff, getting 12 to 14 billion for selling their drug to Amgen so they can pay down some debt. It's coming out of if you look at a daily chart, it's coming out of a real saucer bottom. There's huge room. There's 50% upside to the highs. These are the stocks that you can buy comfortably, in my opinion, and let them breathe and develop. So Bristol is an example of a bullish personality change. It was underperforming the market. Now it's outperforming the market. Another example is Weight Watchers, WW. But I like Bristol because it's such quality with a great yield. I think these are the kinds of stocks that are going to be bid up as the market crosses 3,000 on the S&P on the upside.
What about the stocks like Roku that are just flying, and it looks like it wants to go to 200? I mean, this thing has been straight up. It's kind of gone parabolic. I've said I would not put this in my long-term portfolio because I don't think the valuation makes any sense at all. But I mean, as a trade, the thing is going straight up. So I'm definitely not shorting it because I've seen stocks like this go from 150 to 200 overnight. I mean, Beyond Meat, went like that too. And Roku is right in the center of a great spot to be. They have a great story going, and it's in the center of streaming. And we know everybody's going to streaming. Its valuation scares me away. But what are your thoughts on something like this?
Well, first of all, Roku is being sponsored by Motley Fool, and believe it or not, they occasionally find a winner like this, and their people just ride it. They don't sell, including brokers who follow them. If you want to, so I think Roku has a great chart. If you want to participate in streaming, Akamai, AKAM, it was my bullish stock of the week 3 weeks ago. They provide the technology to enable streaming and speed it up.
I like that.
So
I like that chart too.
It's a good chart. It's not going to look like Roku anytime soon, but it's a really solid company, good earnings, great story, technology driven, and it's all about streaming and content. So Akamai is my favorite place in that space. Obviously, you want to avoid Netflix. Disney has a bearish rating, but people are buying it. But Akamai to me is the clear-cut choice in that space.
I mean, the technology behind the streaming, because everybody's going to come out with their streaming service here. That's why I agree with you on the Netflix. Think about even the market rallying here the last couple. Like, look at the the rally that we've had here in the last week. Really, we've rallied 800 or 900 Dow points here. Netflix really hasn't participated at all. That's telling you the relative strength on this thing remains terrible. If Netflix can get above 300, maybe it looks a little more interesting. But the story here appears to be broken. The competition is coming, and the thing trades with a nosebleed valuation.
Yeah, we've been consistently bearish on Netflix in terms of the Chaikin Power Gauge rating for over 2 years. And, it's had its moments when it's rallied, but basically until their October earnings report, I don't see how this stock goes up. And you got to be careful. They've often disappointed in October for some reason, whether it's the end of summer lull in terms of new account acquisition, but you got to really be careful in October. We had a call 7 years ago right before the October earnings where it dropped 100 points and we nailed it. So definitely an avoid there. Aerospace defense, to shift gears, very strong. Lockheed Martin, Northrop, the new L3 Harris, the symbol is LHX. So all these stocks, plus the XAR, the ETF, looks really good. I like to start with the industry ETFs. We now have the power gauge ratings, so it makes it easier to analyze, not just technically. We roll up the fundamental ratings. So if you look at XAR, Joel, this is a really interesting chart. And then you go for the leaders, which are, as I said, Lockheed Martin, Northrop Grumman, and L3 Harris, and Leidos, LDOS. You got a nice group of names there to counteract Boeing.
I mean, these are stocks banging up against their highs. If the market goes, you got to think. I got to agree with you, Mark. You got to think these are the ones that are going to go. I do have a long-term position, L3 Harris. I think it's the only one I have of the ones that you mentioned. But, I mean, you got to think like that's the kind of stocks you want to own, the ones that are banging up and looking like they're going to break through the roof.
And they will. This is again what I call blue sky territory. When you're up at new all-time highs, there's really no natural sellers. There's no resistance. So as long as the market gives them a tailwind, these stocks are going to really fly.
We're on the line with Marc Chaikin of Chaikin Analytics, a veteran of Wall Street. Joins our show every couple of weeks to give us his technical and fundamental outlooks on the market. Let's talk financials here.
Do we have to? Come on.
Yes, we do.
You're bringing out the script from 2 weeks ago. Insurance, yes. Banks, no. I mean, that's about it. And the money management stocks like T. Rowe Price actually do look good. But the banks, I don't know how they get out of their own way with interest rates heading in the direction they're going.
I mean, from a fundamental basis, it sounds scary. Negative rates, I can't understand. I guess they're still making on the spreads, right? But I just think about all the issues here.
It's like the old candy store joke in the Bronx. The guy's selling, nickel candy for a penny, and someone says, "How do you make money?" He says, "On the volume." So, I don't know how the banks are going to make money. The question is, are they a growth story? And they're definitely not a growth story right now.
All right, let's move over to the hot or non-hot IPO market. Really, when all the dust settles here, Beyond Meat has been really one of the clear winners here. I know PIN interest has done okay, but are you looking on the scrap heap at like Uber or Lyft?
Oh, no.
Work,
No.
anything?
Someone upgraded Lyft to a buy today at one of the big houses, but I think that's actually one of the sources of health for the market, that the new issue market has really been very restrained. But you got a company like Slack, symbol WORK. That's just terrible. Bad earnings report yesterday. The stock is tanking pre-market. So I think this is actually bullish for the market. I don't believe in buying aftermarket new issues until at least 3 to 6 months have passed. Go back and look at Facebook in 2012 when they went public. There's you get the expiration of the quiet period, and B, you get the first earnings report, and C, you get expiration of the the time window where they can't sell. It's just brutal, and the valuations are way out of line. Way out of line. Private valuations are something that wouldn't have stood the test of 2000. Remember, in 2000, companies went public, 2 days after they were formed. Here, the bankers or VCs are encouraging people to stay private, and the public is now paying the price, except for the occasional Beyond Meat. But you look at Uber, Zoom, Slack, looking really bad.
And what about Zoom here? It's interesting because you get this negative Slack report. You'd think that would hit Zoom. Zoom was trading down in sympathy on that last night, and now the market, rising tide lifts all ships. I see Zoom has gotten all of its losses back from last night, is actually trading up a buck here. They do report here after the bell. I mean, now expectations may be a little bit lower here because of Slack. I'm not sure. I mean, it's not identical, but I kind of group those two together because they've got, there is some, wow.
Well, it's like Russian roulette. I mean, they could surprise with a great earnings report. Also, people should realize there are big short positions in all these stocks. The hedge funds who are the only people who can borrow these to short them are short. So if you get a market rally like we're looking at pre-market here, we're up almost 1% in the S&P. You're going to get some natural short covering, people who don't want to be short into a market that may break out. But I just don't think this is where the public ought to be. I think they're getting burned. I looked at a chart of Tilray because someone in our company is long Tilray. And Tilray looks like 2001 in the tech sector. Everybody's talking about cannabis, and you look at Tilray, and it's really frightening. That's one of the worst looking charts I've ever seen. So fads, look at that.
I mean, it got a lift the last couple of days because there was a rumor floated around that somebody might acquire them. I highly doubt it, in my opinion. Just that these,
you can barely see the lift on a longer term chart.
Yeah, I know. It's got it literally rallied 20% here in the last couple of days. It doesn't even show up on the chart.
I know, but so you're not going to back now it's, everybody wants to find the next Facebook. But back when I started the business, someone once said, more money has been lost trying to find the next Xerox than any endeavor on the planet. In other words, trying to find the next big winner that compares to the previous winner is just a fool's errand. And so there's some real opportunities in the market here. If people want to day trade these names, that's great. You guys provide the sort of religion that you need to trade intraday properly, but to establish positions in these and bet on some long-term winner in a field, this is like cable. Go back to the 1970s. Great technology, streaming events, live boxing matches, concerts. The original pioneers of the closed circuit television never survived. Irving Kahn had a company called Teleprompter. Who are the winners? It's Comcast, it's Charter, it's Time Warner. So who knows who's going to be the winner in cannabis? And you can't make long-term bets based on an uncertain future. So I come with a lot of knowledge. I'd like to say I'd love to see the next bear market because I really am a contrarian and I love to go short, but I'm very bullish here. But from a long-term point of view, anybody who tells me they can figure out which of these new issues is the one to stay in long-term is just smoking Tilray pot.
How about the FANG stocks here? Really not much mention of them as of late. I know Apple has a big event coming up. Facebook got hit off its earnings report, has attempting to rally back. We talked about Netflix and Google here. I guess throw Microsoft in there. Give us your take on the FANG stocks.
Microsoft, very bullish. Chart looks great. Moving up. Apple, dead money in my opinion. There's a lot of chatter about how they just can't innovate anymore, and I don't think you're going to see much out of this this product announcement in September. Google looks okay. It's got a bullish rating, but it's not acting well. They've got regulatory issues. Facebook has a bullish rating. So it's Facebook and Google with bullish ratings. Amazon, I think that story has been overdone. Walmart's actually doing a better job of Amazon at capturing the Wall Street following. So I think, to quote an old friend of mine, FANGs are now old news. And throw in NVIDIA. I don't think NVIDIA looks very good from a chart point of view. I'd rather be in Micron or Lam Research in that sector.
Yeah, and NVIDIA just kind of hanging out there at it's up $4.50 today. Comments here on the on gold and silver here. Gold, silver, and bonds all going the same way here. Which one's going to give way first? Silver's tried to sniff $20 yesterday, pulling back. Give us your take on gold and silver.
GLD looks great from a technical point of view, but it's at the top of the page, so you got to buy a pullback. You might get in the gold stocks. I'd look for 3 to 5 day pullbacks to buy them. GLD, the trust looks absolutely fabulous. The bond market, God bless them. At some point, this is a very crowded trade. It's a crowded trade right now, but the IEF, which is my proxy, my ETF proxy for the 7 to 10 year bond, you can't beat the chart. I think we're defying the laws of gravity here with bonds, but almost like a runaway momentum stock trying to get in the way of that roller coaster is impossible, or a steamroller.
What Mark was alluding there to with sell the top of the page is when we started doing technical analysis. You used to get what was that book called? It had all the charts in it. I know I had
a couple of the O'Neill charts, the Mansfield charts. There was one other, maybe Standard & Poor's had them.
Yeah, you used to have to draw in the lines every day, right? With a ruler, and then eventually you got to the top of the page, and when you got to the top of the page, that was a sell, and you had to wait for it to come down to the bottom of the page for a buy. But
boy, you guys are dating yourself big time here. You know that, eh?
Yeah, well, nothing like old time skills. Charlie Manuel, the new hitting coach for the Phillies, is doing a great job without all this jargon about liftoff and exit trajectory and so forth. So sometimes the old methods work.
All right, let's rip through a few stocks here. Then we're going to let you go on a busy day here. A lot of chatters are asking about questions. First, OKTA, I believe that is a cloud stock. Any thoughts on OKTA?
Well, it's actually a password aggregator, and it's a very good company, but it has a bearish power gauge rating. So under 130, which is where it closed last night, the fundamentals are just way off the charts. It's got a decent chart. It's not as good as some of the ones we just looked at, but just to give you an idea, it's trading at 30 times revenue, and guess what? Losing $1.40 a share. So wonderful technology. It enables you to aggregate passwords and log on to multiple applications. It's great enterprise software, but I can't get into a stock like that except on a momentum trade, and right now it's under its long-term trend at 130.
Square, here's a tough one. Everyone loves Square here, refusing to participate in the market, just hanging on the lows of the move here. Anything good to say about SQ? And let's throw PayPal in there too.
Well, that's interesting. I was going to throw PayPal in as well. Square is absolutely a sale on strength. The stock has lost its cachet. PayPal is acting poorly. The two in the space that we've liked off and on for the last 12 months, MasterCard and Visa, look like they're going to be the winners. Apple, the Apple credit card and Apple Pay, I think is going to be a big bust. When you get Goldman Sachs and Apple partnering on something, it should be a huge win, but it's not getting traction. But Square, I'd avoid. PayPal, I'd sell on strength. If you're looking to play this electronic payment space, it's MasterCard and Visa on dips only. 3 to 5 day dip.
I sold part of my Square yesterday, so I agree with you here. I was trying to play it off this low, and it's just hung out here too long. And that's why I'm scared now, and I think eventually it's going to cave. We talked about it yesterday on the show, me and Joel. The relative strength on this thing is terrible. It was up again. It got upgraded, 2 upgrades 2 days ago. It comes down. It got another buy rating, I think, yesterday. It gives it back again. This morning it's rallying with the overall market. I don't think it holds. I think eventually it's going under 60, which is why I still have a small chunk in the long-term retirement account, but anything for a trade is now gone.
Yeah, also, I think that's a perfect analysis. Look at the reaction to the last 4 earnings reports. After each of the last 4 earnings reports, the stock has spiked down. So what that tells me is the expectations are still high for Square. They don't meet them, and the aggressive money gets out. So this is no place for long-term money or intermediate-term money, in my opinion.
All right, just going to stick a couple. We're keeping you long today, Mark.
No, I like it. I'm heading up to.
You already have your breakfast? I mean, we don't want
breakfast of champions. I had Wheaties, believe it or not.
to Wheaties. Okay, all right. So, what if someone came to you and said, "I'm long Roku, and I have no target. I have no idea when to get out of this thing." What would you tell them?
I'd look at Chaikin money flow, which has been strong basically since January. And if it's not going red, if it's staying above 0 consistently, I'd stay with it. You're getting another one of these French curve spikes, but it's done this in the past and kept going. So I think you've got to have a stop that reflects if you really want to make money in this thing, the long-term trend. Right now, the long-term trend is at around 117. So that's way under the stock. There's no other way to play these, but there's a technical pattern called the French curve or the hockey stick, and that's what you're seeing now. It doesn't hurt to take some money off the table when you see the hockey stick, and that's where you are right now. So 170. If you're long, you want to take 50% off the table and then ride the rest, but you still have to have that point at which you say the game is over. And typically it's our long-term trend line, but it's a long way from there.
Yeah, you'd be giving back a lot of profits if you waited till that area. We've been on the line with Marc Chaikin of Chaikin Analytics, joins the show on Thursdays every couple weeks. Marc, great having you on. As always, it's fun to get the fundamental and technical outlook on the market. So we will let you go, and we'll talk to you again soon.
You guys keep me sharp. Dennis, Joel, great to be with you. Next time.
No Spencer today. Spencer's at a wedding. So
yeah, well,
We're breaking in Seth here. He's
Who
doing
gets married on Thursday? I don't get that.
well. It's actually on Saturday or something.
Oh, there you go. A destination wedding. I love it. Okay, thanks. Look forward to 2 weeks.
Okay.
Mark.
Let's quick someone. We did get to ask Mark about Shop, but your only Canadian tech stock. Kind of quiet here, trading up 521. I mean, maybe put a stop under 370 and say, come and get me on the downside.
Yep. I like that.
Yeah, I mean, I can't.
I think the trend continues. I've said this for a while. There's no other place to go for Canadian tech money. And you've got people investing in the tech sector and looking to Canada. It's the only really place to go. That's why I think it's eventually $500. I like that. You know, if you come in here right now, if you're buying at 390 or 391, stop up below the low, that 370 low from the other day. That's your stop. I'd say giving yourself some wiggle room. I think it makes new highs.
If you want to I can give you one other number besides that. You know, let's just call the high 410, the low of the move 372. So what's that? That's 28, 38, 19. That takes up 390, and you're trading above it right now. You're trading at 390.61. That's a half of the bounce here. So I like to see it close back over 190 and then make or 190, 390 and make a run at. But that just, you know, the old 50% retracement is something that I like to look at. And
you know what it looks like?
What?
It looks like Roku back in August when we got bullish on the show there too. When Roku had the run up to 142 and then another 3 days of consolidation. And I was saying, I think it could be 150. I think I said by the end of the month. I don't think I quite got there. I think I might have missed it by a day. But anyways, or maybe I did get it. Yeah, no, I did get it. I did get 150 by the end of the month. And I was saying eventually I think Roku could go to 200. It looks the same. The Shopify chart looks like that Roku chart with those 3 days of consolidation in there. And if you start to break out and you start to get some life here again, if the market breaks out, I think this stock could be $500. I don't own it yet. I might actually buy this though today. Not long term account though. With the strategy that you just put in, saying I stop up below that low of 371.
I tell you, if you would have been on, you know, you had that little break and then the 3 days of consolidation. If you were using the 50% on that break, I mean, you would have bought it and never looked back. That would have been like in the 130s. But do we have anything on Sienna? Everyone says
earnings.
Yeah. Do we have the earnings report for CEIN? CIEN. Thank you, Brinster. Sienna, CIEN.
Going to the trusty Benzinga Pro. Mr. Seth in the background is going to grab us those numbers. I think you're just crossing because this is really ripping right now. It's up 43. It's up 43 right now. It's up 4%. But I just thought rip about a buck here in the last couple minutes.
Yep. So earnings were this morning. It looks like we have an estimated revenue of $932 million, and they came in at $960 million. So beat it by like 30 mil. And then estimated earnings per share was 0.57, and they came in at 0.71.
In any regard, they're liking the report here. It's now trading up 5% here in the pre-market.
It looks like the call is currently in progress for their earnings too.
Yeah, okay, so you got conference call maybe moving around the stock here too. Good call there, Seth. You got up to 46. Let's see. There's room to there. But I mean, it's up 5%. I don't like chasing stocks. So this is in coin flip territory for me here. It could go back. It could continue to run here. It's still in the digestion period from the conference call going on. So news breaking as we're speaking about it. So I'm hands off on Sienna right now.
You did get a pop to 45.49, but you're leaking off that. So that's not good when you hit a pre-market high and then you're immediately $3 off it. So I would look for sellers that were actually 42.30 right now. So that pre-market high, if you had some offers out there, I think they were probably good offers. They got lifted, starting to pull back. The top of yesterday's range comes in at 41.88. So you might get, if you're looking for a gap fill on this one for it to go back up, there you have 41.88 support. We're coming right back to that right now. Your close was 41.20, but for some reason here, we got a little bit of a leak going on. Someone also asked about Home, HOME. I believe they reported too.
I don't follow this company at all. I think there's a reason for it. I just looked at this chart right now.
Group?
This chart is awful. $40 down to $6. Now it's down to $5. Let's see what it does at $5. That's always the psychological level, because in a lot of brokers, that's where security becomes marginal above 5. It's pulling back. I have no commentary on this other than I'm a seller of rallies. You're not getting a rally here today, so no trade for me. Not buying dips on this one.
Did we got the report on this one?
Yeah, earnings report came in after market yesterday. They had an estimated earnings of 343 million, and they came in at 342. So they did miss earnings by negative 0.24%, and then their estimated EPS was 0.15, and their earnings was 0.18. So they did beat their estimated earnings per share.
We'll just look for that all-time low in home at 458. We just haven't quite traded there yet. It seems like someone has a little opinion here at 540. So you take out that 540. The all-time low for this one is 458. That was made in August of this year, just last month. Big gap down, perhaps after its last earnings report. Not looking good here for Home Group. A couple other stocks here. Joe Dagger wants to ask about Stag. That's a stock I've never heard of here. It's trying. I mean, it's had a nice rally off the low. I think for this one to really get it going to the upside, get over $30. I see highs. 29.76, 29.56. So nice breakout out of over 30.
It's a REIT, so these things you're in it for the dividends. 4.88%. You don't get see big movements on these things.
Nope.
You're in those for the dividends. They trade like bonds.
Okay.
I want to take over for a second here.
Yeah, go ahead.
One of the stocks on my list here that we haven't had a chance to touch on. First of all, let's move away from the earnings for a minute, and let's talk CVS. That stock is trading up substantially here in the pre-market. It looks like this is over now. So that we had a headline there, and Seth, if you have it there in your pro, you can grab it. But it looks like this merger is finally finalized. I mean, they bought Aetna; it was already done, and then they were trying to reverse the merger. The government trying to come in and challenge the merger, potentially reverse it. They announced a settlement last night. So CVS Aetna will obviously stay together as CVS Aetna, and CVS is rallying on that news. Do you have the actual headlines, Seth?
Let's see. We have a the only headline I see from yesterday in pro is VIAB's backish downplaying speculation via
settlement information. Anyway, I just gave you the info, so
yeah,
it's settled.
I'm sorry, Dennis, go ahead. It's settled. CVS has been strong. I mean, that stock trading near the highs of the pre-market session. Little bit of opinion here at 63.27, 63.30 has been your high there. Former high of the move, you're taking that out at 62.58. Little bit of support here, but I mean, rounding bottom, this thing gave you all kinds of opportunities.
Lots.
51, 52, 52.
And there was some exec buys down there too. Those exec buys turn the stocks around sometimes. We've talked about that before on the show. And I can remember back, I think it was April or May, you had some executives coming in and buying the stock, and that actually was the low. Now you're coming in, you're buying it now, you're buying somebody else's profits. I mean, the stock's up 10 points. It is still a dog. It is still a stock that is in a clear long-term downtrend. I'm not coming in here and buying CVS now. I think you're late to the party here now. It has room to 65, but it's still challenging going forward. Stores are on every corner. We know Amazon is trying to eat some of their lunch as well. I'd be more of a seller of CVS longer term if I had it into some of the strength here, but short term, it's got some wind in its sails.
Does this make you want to rush out and grab the stock that gave up a great symbol for WBA, Walgreens Boots Alliance here?
Because it really hasn't rallied?
Yeah. I never do.
That's interesting in itself. You're correct, Joel. WBA and CVS have always paired well together. WBA has not rallied. WBA has some room. It's interesting. It's obviously concerning. It's been, I'd say, below 49, I wouldn't want to own it. But if you're saying, okay, I think, as eventually the dogs are barking here a bit, some value here, 3.53% dividend, maybe. I'm not going to jump into it because it is a dog, and I do believe that, there's competition and there's a lot of other issues not to own these two stocks. But you're right. It's been a lagging performer here, so maybe it could play catch up a bit.
And Eddie, before I'm going to do some stocks here from the chat, was there any other issues?
Just quick ratings before we then we'll pound up this is one of the biggest ratings days that I have seen in a long time. And Spinner pointing out Sienna reversal. This is why you can't jump in on these earnings. This is why I said it's a no touch for me, because and I just said it's like 5 minutes ago. Rewind the tape. I just said when they've got the conference call, I got to wait until it's in the digestion period. So there was commentary coming from the conference call. People were ripping it up, buying over $43. It's 39. It just gave up 4 points. Just gave up 10% here in the last 5 minutes, Sienna. So, I mean, you got to let the dust settle on these things sometimes. And if you don't, you could really get burned. And that's what we just saw happen on everybody who was chasing Sienna here 5 minutes ago. The algos start chasing, maybe something's said and they like it, and then something else gets said all of a sudden and they start hitting it. You're not listening to the conference call, you shouldn't be trading the stock. We're doing a live show right now, obviously, so we're not listening to the conference call, so we can't even analyze what was being said because we're doing our own show. So no reason to be trading the stock during the conference call unless you're actually listening to the conference call and trading news interpretation.
And if I was listening to the conference call, I don't think I would know what to do. I mean, it's
hard.
Yeah,
they're hard. The interpretation on the conference calls are very difficult. And people say, like, Kramer, you got to listen to the conference calls. If you own 2 or 3 stocks, when you're trading everything, those conference calls take up a lot of time. I'm waiting for the headlines to break from your Benzinga Pro that are analyzing, because we have people listening to the conference calls to break in headlines on what is being said. Charles does an excellent job of that, of breaking in on what is being said. But, for you to listen to all the conference calls, especially during earnings season, it's difficult. It takes up a lot of time, and that's screen time that you could be trading too. I don't make a lot of money listening to conference calls. I mean, there is some alpha there if you're all over it, but then the interpretation issue, you might interpret it wrong. There's definitely some people who was just on that conference call because you said it was going on, interpreting it wrong when they bought the stock up to $43. It's 39 here now. Completely reversal. This is a big move, and you're in that full digestion period. So it's hard to make trades when you're not listening to the conference call and the stock is digesting new information.
Yeah, I mean, it almost went to a new all-time high on that, and now we're back. I'd like to see what happens here at $39. Your 2-day low is it's more than that. No, you got a pair of lows at 39.19, 39.35, August 27th, August 28th. Just took that out, but 39. That's what the bulls need to hold here for Sienna to get back. Get back and head north a little bit. Big earnings reversal. Boom. Other standout ratings to you, Dennis?
I don't have them in front of me, Seth. If you can go bring them up. I did not actually. Write
Yeah.
them down either. I was lazy this morning. I usually write them down when there's 4 or 5, and then I see 50. I'm like, yeah, I'm going to get a hand cramp writing those down. I just moved on.
Okay. One that Joel and I were talking before is Activision Blizzard.
Yeah. Well, I like that one.
Stevens & Co. upgraded them to overweight, and I think there was one more upgrade for them as well.
I'm finally making some money on this stock, or at least, I'm getting up some money in it. I've had in the long-term portfolio forever because Michael Pachter liked it. And I was like, he knows more than I do. So I bought it for that reason and that reason only. And, I like the gaming space. But it's 2 upgrades in a row. Got upgrade yesterday, I believe.
Stevens today.
Yeah, and it gets another upgrade here this morning. So back-to-back upgrades here, stock lifting. We're in a little area where there's a lot of room to the upside here.
Yesterday.
Yeah, we said it yesterday. I mean, yeah, you have a high of 55.60 from the 16th, but then you start looking. We really cascaded down through this area very quickly. We always say what goes down through an area can come up through an area quickly too. I think there's room to 60. I'm sticking with it.
Yeah, they had very, very nice move there. Finally cleared that 52 sticky area. Now getting a move with the market. You're just going to have to go to your dailies here, because when I look on the monthly, there's just not. I mean, I have to go back a long ways. Is there any gaps here? Huge old gap. This is what when you say up to 60, this is the area what Dennis is talking about. You had a really bad day. You closed it. Closed at 62.79. You had a next day, you closed at 55.01. Your gap is created between 56.92 and 62.35. That's going back to November of last year. S&Ps, itching up back towards the highs of the session. I'm sure they kind of like that ADP number. The bonds tanking. That's good. That's good for the financials and good for the stocks.
Yeah.
Bonds down $1.50.
Easiest thing, just look at your TLT. When you see the TLT down almost $2, you know banks are going to be relatively strong. And that's exactly what we're seeing this morning. The market's up 0.95%. Bank of America up 1.9%. Full disclosure, I have some long overnight position, which I will be selling today. And Bank of America actually just lightened up some right before I started talking about it. Morgan Stanley 1.7% here. Goldman Sachs up 1.5%. I have a short on Goldman Sachs, which is a hedge against the Bank of America. And those are just overnight trades. Again, I will be taking those out after the open. Morgan Stanley trading up. I mean, all the banks are ripping, and that's all due to the TLT. If you're trading banks, you've got to have the TLT on your screen. It is what moves the banks.
Match Group gets an upgrade at SunTrust Robinson from hold to buy, moving the price target from 90 to 106. Big move off the earnings, consolidation, and then pow, trading up near the highs of the pre-market session, up $3.06, 88.85. What's this high here? 89.50. That's my first target. That was the second highest all-time, or off the all-time high. That was the high the next day. All-time closing high, 91.77 for Match Group.
Remember, IAC moves with that too, so keep an eye. If Match is trading up substantially, IAC will often follow suit because they own a huge chunk of Match.
Okay, and what else did I see? Wow, there is
there's a lot. So just grab the high. I'm
just trying to find the good ones here. Comcast gets an upgrade.
That's interesting, yeah.
Yeah, at Oppenheimer. From perform to outperform, no price tag yet. Let's look at CMCSA. Whew. Boy, oh boy. Break it out of 58 cents here, 46.20. That's a new all-time high for it. The high of the pre-market session is 46.85. So we'll keep an eye on that. And the stock that, I always look at it and say, man, why don't I own more? AT&T, what's the dividend on that thing still, Dennis? Like 5.5%?
I sold my AT&T and it was the wrong call. It's been coming back. I had AT&T in my portfolio for a decade. I'm getting dividends and making a little bit of money on the side. It was a pretty good one. I just kind of thought, and I still kind of think that eventually there's a lot of debt. They've had some bad purchases. I never thought about the dividend being cut here. I don't think we went that far, but I still don't see where the growth is coming from here. It does have a nice dividend, though, and they're obviously buying it for the dividend still, 5.69%.
Yeah, I mean, where are you going to get that in the bank? Quick question.
I sold mine, and I don't like the long-term story here. So I think there's going to be eventual more competition coming for them, and it's got a ton of debt.
Alta threw people a head fake yesterday, thinking a rally, and then took out the low of the move, only trading up 29 cents. Poor relative
disaster
there. I mean, we talked to a few other people. We've been looking at 224 on the monthly. So if you're looking to start a long or cover a short, we'll see what happens here. But boy, oh boy, nowhere near the high that it made on that disaster earnings day.
Nice learning experience here for me too. And Spinner called me out on it earlier, and I completely agree. These things have, bad news, bad earnings. You got to stay away from them for a while. I was trying to be a hero, and this is why ULTA is a no-touch still for me here, making new lows, obviously completely out of favor, maybe more managers selling. I tried to be a hero, bought a half-size position, my long-term portfolio in Sarepta at $100, and went up to 105, and I was like feeling pretty good about myself. 2 days later, I'm feeling pretty bad. A week and a half later, I'm feeling really bad because I'm down 15% on that thing now because the stock is trading at $86. Terrible trying to call the bottom on it. I put it in the long-term retirement account thinking as a spec. That's why I was only a half-size position. I did say that day, I was like, this could be a zero, but, it could also go up. I'm sticking with it as a spec, but I was way too early. There's no reason to jump on these things right away when they're out of favor like that. Wait till you start to, rounding bottom like we were talking about, or it stops going down. So, maybe it's going to work out in the long run, but, as a trade, I'd have no business and I would be gone. I put it in the retirement account, and I try not to stocks I put in there. It's a stock I wanted for a long time, but I should have waited. and I just got way too early. So here I am, talking about, stocks making new lows, you got to go. And I did the exact wrong thing, didn't listen to my own words, and put Sarepta on my long-term retirement account, and it was a mistake. I was way too early, even though I still like the company.
I do have one that had 3 rating changes this morning. HubSpot, they had a upgrade from RBC Capital and Raymond James and Bank of America, all changing their price targets.
How about we talk about Netflix here? Dennis, cancel your bids in Netflix.
What happened?
Well, from our chat, I think I see the coin collector says, now this is just, I don't have confirmation. Disney's giving you free 6 months streaming when disconnecting from Netflix. Do you see that anywhere? I don't see that anywhere. I'm just getting it from the coin collector.
Can they do that?
You can do whatever they want. Why not? They're full on attacking them.
An email from Netflix, be like, hey, I canceled. Give me 6 months free of Disney.
Obviously, there was a headline that just happened here in the last couple of minutes because Netflix is trading down 3 points now on a day that everything is up. So again, relative weakness in here is the tell. I don't know if that headline's confirmed. I'm not seeing it here either, but I'm, obviously doing a radio show, so I'm not really hunting that much. But I'll tell you, the stock is looking not good on the charts. And the story, I believe, is broken. I said it on the show. I think Netflix is going to be under $200 eventually.
Yeah, and
I said it a while ago when the stock was trading in the 300s. I think Netflix is going under 200.
I was
not
looking,
shorted, no position. Honestly, I should be shorted.
I was looking at puts in that thing, and it just, they were so expensive. That's when you got to go sell the call spreads. That's I got to call up Nick and say, Nick, I want to go short Netflix. The puts are too expensive. He'd say, sell some call spreads and let the premium come in. It's just those things are just slow on the decay. For RU Connect, let's just end it with CSIQ, Canadian Solar. Same thing here. A big run up, and you've had a pullback. You went from let's call it $25.80, $25, a little higher the move for the simple math. Down to 22. That's about what, a $2.50 move, $3 move, 23.75. You also have a high in that area, 23.87. That's what I like to see it get back above today. Get into that.
Love all the solar companies.
Yep.
Love them all.
Okay. All right. Well, we're going to wrap up today's show. We wanted to thank Seth for sitting in and doing a great job here for Spencer. Spencer will be back with us on Monday. Friday, we have the jobs number, and that's going to be the ADP report. I guess was pretty good. I'm trying to decide with the jobs number, who do I have for a guest? Oh, I have Mish Schneider for a guest tomorrow. That should be good.
Mish is good.
Yeah.
Are we playing a little game tomorrow?
I'm thinking I got to check with the Brentster, but I'm thinking I'm bringing in the Brentster here against you, Dennis, and this is going to be a pretty good one.
Okay, and then the next week we're going to set up something.
I know. You want to put me in the fight.
I'm going to get some questions going because I keep you on the spot. We're going to see how Joel's trivia is too. Next week we're doing Joel.
Okay, we'll do it. Me against Spencer.
I'm giving you some really hard questions because you've been really mean. You've been really mean to me. These have been tough questions.
You just because you're 0-2, you lost to Jeremy on the S&P.
I tied Jeremy. I lost to Spencer though.
You lost to Spencer.
Me and Jeremy tied.
Okay. All right.
Remember, I was going to lose my job. I wouldn't be here right now if it was because Joel throws my job on the line all the time just for fun. And
this is going to be fun, and I think this is something that Brent's really good at, and you're really good at too. So it will be maybe 8:55 tomorrow, Brent, near the end of the show before the 9 o'clock rush, because we want to do the jobs number and everything at 8:35. All right, we're keeping Seth overtime here, so let's wrap things up for today. Pre-market high 29.71.75. That's my first target on the upside, so we take that out. Really don't have any numbers. We had some highs over 3,000 in the S&P, so maybe pick a fib level or something like that for potential resistance. So thank you all very much, and back with you tomorrow morning.
Yep. If you missed any of today's show, you can find it on iTunes, SoundCloud, Google Podcasts, TuneIn, or Stitcher by searching PreMarket. Please remember that all information, material, and content from our show is for informational purposes only and not meant to be investing advice. That's our show for today. Thanks for listening, everyone, and we will see you guys tomorrow morning.